All right, hello everyone. Happy Monday. Welcome to another week of trading. I'm your host, Greta Wall. It's a weekly market check-in here with myself and Derrick Oldensmith, the leader of T3 Live's ProDesk virtual trading floor and a professional prop trader with T3 Trading Group. Happy Monday, Derrick. How's your day going so far?
Happy Monday. So far, so good. P&L is green. I'm happy. It's Thanksgiving week. Looking forward to good turkey dinner at my aunt and uncle's on Thursday. So that's about it.
All right, great. All right, quickly, let's take a look at Derrick's current positions. These are the positions Derrick is currently holding. As I mentioned, he is a professional prop trader with T3 Trading Group. So you can see everything that he is currently trading as of 12:29 p.m. Eastern time today. All right, so our topic today, Derrick, is trading ahead of Thanksgiving. It is a short week for the market. We get 3 days of trading, we get a break, and then a half day on Friday. What are you focused on when it comes to this week? And then we'll talk about some specific topics coming up.
I'm focused on market continuation is really what it is. The technicals of the market are really, really strong. If anything, the holidays that happen in November and December actually add to the strength of the market, because if there is a certain amount of buying that has to come from, corporate buybacks as an example, they have less trading days to get that done because of those holiday sessions. So it's part of the impulse that enables November and December to be a seasonally bullish period of time. So I'm really just looking for market continuation. I've primarily really gotten to the long side of the market over the course of the last week or so. With that said, this morning we started to get a little bit of upside extension in the IWM. So I've put on some cute little IWM TNA shorts, and that's working okay so far as well. But that's just more of a shorter term trade. More broadly than that, I'm really bullish right now.
With the truncated week, with the shortened week, we get a ton of data we get some data tomorrow, and then Wednesday we're getting like a bunch of data. We're getting durable goods, weekly jobless claims, GDP revision, the PCE price index, the retail sales or retail inventory, not retail sales, but the PCE price index, pending home sales, just like a ton of data on one day that would usually be spread out between Wednesday, Thursday, Friday. Are you expecting any kind of volatility with all of those numbers coming out, or are you focused on any of those numbers, or does it just not really matter at this point for the market at this time?
I don't think it overly matters. It'll obviously be impactful in the moment, but I just think that the seasonality and the forced buying that's coming in right now is just a train that you can't really get in front of. I mean, you could put a little bit of a barrier up if there's a weak number that can slow the market down a little bit from continuing higher, but all dips in this market have been buyable. Every single day last week, we had an intraday dip that was buyable, and then we closed well. I know we've dipped for most of the morning this morning as well after a pretty big gap up. There's a good chance that becomes buyable at a certain point also. You got to pay attention to your extension rules. I wouldn't chase the market higher, but reasonable pullbacks, dip buying, that's the move right now, I think, really from now through the end of the year, through the beginning of January.
All right, let's talk about NVIDIA real quick post earnings. Last week, so we got NVIDIA's earnings report last Wednesday after the market closed. If you want to maybe pull up your charts and we can go through what the stock has been doing since earnings. Of course, a beat and raise quarter as expected, but some of that not being good enough for the market the day of. So let's look at what NVIDIA has done since then and what you are looking at when it comes to the stock. Do you have your NVIDIA chart up?
Sure. So we can pull up the chart, the screen share here. NVIDIA $150 has been a really, really important level, and it's a level that's still worth having an alert out in front of. The NVIDIA report was good. It was a good report. They beat on just about every single number, except I think on their forward guidance for revenue was basically in line. So pretty much everything was a beat or in line. And the stock has traded down since that report. So this is exactly what we were talking about. This is exactly what I know my buddy JR Romero and I have both been talking about this, that the expectations that I've built into this NVIDIA report were just so lofty. There was so much relative strength in NVIDIA compared to those other stocks that I was of the opinion that a good report would not be good enough. Is this a disaster that we've traded from $150 $47 to $137. Is it a disaster that we're back to trading where we were on November 2nd or November 3rd? No, it's not a disaster. But that insane relative strength where it seemed like every dollar that was available to buy in the stock market was going to NVIDIA is gone for the moment, at least. And again, it's still worthwhile to pay attention to that 150 level up there. I have an alert out in my computer system if it works its way back up. But for the moment, NVIDIA is relatively weak. It's an inside day and down from Friday through today. It lost 140, so it's losing some support levels. In the big picture of things, I think dips in NVIDIA are viable. But whether that's a viable dip at 130 or 115, I really don't know. We'll take it kind of one step at a time. The most interesting thing to me about this, though, is that NVIDIA has been able to be as weak as it has been since its earnings report, and the market's 100% fine. The market, the most important stock in the universe, if NVIDIA goes down, everything has to go down. That's not what's happened at all. The Qs have been a little bit relatively weak compared to the IWM, but the Qs are fine. Qs are fine. SPYs tickled all-time highs at a certain point today, and what it's leading to is a little bit of just rotation elsewhere. Look at this move in the IWM over the course of the last four trading sessions. So it's just a little bit of money coming out of NVIDIA, but not rushing out of the stock market entirely. It's just rotating into other places. And if anything, this is just another case in point on why the market itself is so healthy and so bullish, that the most important stock in the world reports and trades down a whopping $10, and the market doesn't care. So
yeah, with that rotation and the broadening of the market, the money broadening across a lot more names. I mean, we're seeing the payment platforms just have extreme strength, and it's not just big cap tech, it's small cap names and mid cap names, not the NVIDIA, et cetera. You have the Upstart chart up right now, and SoFi, and the payment space I think is interesting with Black Friday coming up. Do you expect strength in those stocks this week as we're, Black Friday's been happening kind of all of November, but this is the week where, most people have their largest sales?
I think that those types of events are pretty quickly priced into the market,
yeah.
And they tend not to move away from expectations to such a large degree that there could be a surprise that really hits these stocks down. I mean, we'll see those numbers as they hit on Monday and Tuesday next week, especially. The biggest thing for me on some of these names is that they're really starting to extend up to a place that I'm uncomfortable on for the moment, at least for the short term. So like even SoFi is a great example, because SoFi is a name that I did very, very well to the long side this year. Crushed it, was long from $6, under $6, caught a 100% move in the stock. And then, a week ago, I was still selling puts in it for more cash, because I'm willing to be a buyer on dips in this thing. But for the moment, I'm fully flat in the position. And even though I think that SoFi is still worth more, I think it's worth $20 or low 20s. That would be like my big picture price target on the stock. It's too extended here. So I actually communicated SoFi as a short today. I think it's the first time I've communicated SoFi as a potential short in a very long time. But I'm looking at a stock that's like, what is this? Like 7 days in a row to the upside, plus a really big gap up this morning. It's going completely parabolic. It's a $16 stock with the ADMA at $14.68. This is the type of extension that is unsustainable, even for good companies. So I'm a bull on SoFi. I want to buy the dip on SoFi. But what I said to the team in the morning meeting this morning was, at above $16 here now, I would rather be short the stock than long it. And I didn't actually take that trade, but it was an idea that I presented to the team. And there's been some extension shorts out there. There's aspects of this market that are starting to get a little silly. The quantum computing names today they're continuing to go nuts. They started going nuts kind of like last week. They're continuing to go nuts today. Like this Ion Q is an example. In the beginning of November, this was an $8 stock. Today, it traded as high as 35. Or what's the one that I'm in? It starts with a Q. QUBT is one that I'm trading to the short side today, just because of the extension. I mean, this thing went from $1.50 on November 13th to above $9 today. It's a day 4 to the upside with the ADMA at $4.66, and the stock was trading above 9. So that was a pretty good short at a certain point today. It's like there's another one, QR. God, I can't remember. QR. I can't remember. I could try to figure it out. But there's another one that I'm hearing isn't even a quantum computing stock. QMCO, I think it is. I'm hearing, and I don't know if it's true or not. I haven't done my own research, but the company is called QMCO, Quantum Corporation, and I'm hearing that this isn't even a quantum computing stock. It just has the word quantum in its name, so it's up 136% on the day. Again, I haven't done my own research on that, so I recommend that people fact check that. But this thing is up 138% on the day, and it's like $6 off highs. Like the market in certain areas here are starting to get a little crazy, or like AI as an example, a little bit of a different stock. But this is a day 4 to the upside into $40 with the ADMA at 33. I mean, this is great because it creates a tremendous trading opportunity, but it starts to concern me a little bit when you start seeing all these stocks start to go really crazy kind of all at once, that the move is getting a little bit long in the tooth. Yet at the same time, I'm still super bullish on this market. So the biggest thing, the healthiest thing that I want to see right now is rotation. Let's get some of these crazy stocks take a break. Let the money come out of them. Let's let the IWM, which is starting to get kind of extremely extended to the upside at highs today, take a break. Let's have the Qs catch up a little bit, which is interesting because usually it's the Qs pretty much all year that have been massively outperforming the IWM. Right now it's the opposite. The Qs have zero extension to the upside at all, probably because of the NVIDIA weakness, whereas the IWM is even still here at 243, has a very healthy amount of upside extension. So, overall I'm bullish, but there's some stocks that are going crazy, and they're making for great trading opportunities. So I love this environment right now.
All right, I've heard your opinion about Bitcoin in the past, but we haven't crossed 100,000. We got to a high of 99,436.67 on Friday, and then pulling back since then down at 95,000. What do you think about the crypto space here, specifically Bitcoin? And I'm sure you trade. Do you trade mostly through IBIT to have exposure to Bitcoin?
The one that I've actually been trading has been BITX, which is a 2x leverage Bitcoin. I shorted BITX on Friday, and I kept it over the weekend, and I liquidated that position into the down move today. Look, I guess I'm becoming known as the person who talks about how crypto is worthless. Look, I trade things to long side as far as individual stocks go that I think are worthless too.
Right. Yeah.
It doesn't mean that
if the technicals say to trade it, right?
Exactly. I'm a trader. So, using this IBIT chart as an example, I was pretty bullish on this breakout through this $42 and Trump, becoming the president, because crypto is a Trump trade. And I still think, I actually think after this move, because now IBIT, as an example, went from 42 to Friday's high of like 57. It's a really, really big move. At this point, with where we're getting to, I really think for a major continuation in Bitcoin, you do need Trump to announce the Bitcoin Federal Reserve that he's spoken about. I think it's going to be hard to sustain this level of increase in price without it. So I think that you need that. And if for some reason he disappoints, this stuff could get destroyed very, very quickly. Another thing I was talking to my team about in the morning meeting this morning, which I'll mention again here, is I don't ever post or anything, but I pay attention a little bit to like what the Wall Street Bets community talks about. Sometimes just to torture myself a little bit, because the amount of people, the information that I read in there, people have absolutely no idea what they're talking about. It can sometimes be painful, and it makes me feel bad for them and concerned about their well-being, to be totally honest. But over the weekend, what I was seeing from that type of community was everyone's talking about which altcoin now to own. And I can't list them to you. I don't really follow the space very well. But they're talking about all of these different altcoins. And it's like, if I think that Bitcoin and Ethereum are somewhat worthless, like some random coin that like somebody just made with like someone's name on it that has zero worth, zero use case, zero anything, is like beyond worthless. But what ends up happening, and again, that's just my opinion. Let's take my opinion out of it. Something that I see that's more of a hard fact is when you begin to see like that community start to spread out what they want to buy, it actually begins to negatively impact the entire thing. And we can think about it with the stock market too. So if we remember back in like late 2020, early 2021, when like the Wall Street's bet community first became like a really big thing, it was GameStop, it was AMC, maybe it was Bed Bath and Beyond, like one or two other names, and that was it. That was the hype. But as that theme of like Wall Street bets started to get like deeper in the weeds, get a little bit longer in the tooth, whatever expression you want to utilize, then it became about like these people seeming to pump whatever stock they happen to be looking at. And then all of a sudden, when you take that community and you don't have them like concentrating their buying in just Bitcoin in this current example, or just in GameStop in that example, when they start to spread their money out to all these places, instead of making everything shoot through the roof like GameStop did, then nothing goes through the roof because the money gets too spread out. And that's what I see when I'm like looking at this Wall Street bet stuff over the weekend, and I'm seeing like no one's talking about buying Bitcoin in there. They're talking about like, you know, which altcoin has the best fundamentals that they should be buying, which to me is mind blowing. And then everybody arguing over like which is the right one. So now they're starting to spread that money out to all these different places. And next thing you know, what do we have today? We have Bitcoin down, or this IBIT ETF is down 4.4% as we're having our conversation. So I'm not surprised to see that at all. And this has also led to incredible trading opportunity. I mean, this MSTR last week, shorting this MSTR was like one of the trades of the year, honestly. It was just you can't even see the peak of it in my chart. There you go. This also, and again, this is why we count our days. This is why we measure extension to our equilibrium zone, the space between the 8 and 21 EMA. This was a day 4 gap up on MSTR to $540 when the 80 EMA was down at like $380. It was just getting completely silly. It was getting decoupled even from how Bitcoin itself was trading. This should trade like levered Bitcoin. It wasn't for a little while there. It was like Bitcoin would tick up a little bit, this thing would go through the roof. Bitcoin would tick down, this thing wouldn't go down at all. It just totally became decoupled with even how Bitcoin trades. And then we had this monster negative candle that came in on that day 4 to the upside. And, you know, my team and I, we were all over communicating the short that day. And I really think it turned into like one of the best trades of the year. I'm out of the position now. I think it could pull back further to 340 or 360. Definitely also depends a little bit on what Bitcoin does. But when you start to get this extended and everybody starts talking about it, a lot of times it starts to mean you should be looking the other side and not really, you know, following the crowd. I'm a big believer in trends, and if you're a trend follower, it means that you do what everybody else does. And oftentimes that's the best way to approach markets. But the times in which you really want to be a contrarian are in periods of extreme, when everybody is talking about how you have to buy MSTR and the thing's trading at $520, or now everybody's talking about what altcoin to buy. I think that's when you should be a little more conservative and run for some cover.
Mm-hmm. Since the election and Trump's win, the language a lot has been, you know, animal spirits are out and people are buying things that they haven't bought in years. And you see Tesla going from 306 to 360 in 3 sessions. I mean, the market is definitely totally different than what it was earlier in 2024, very reminiscent of, you know, much more 2020, 2021 feels in the market. Do you expect that to continue through 2025 with Trump taking over in the White House?
Through 2025 is very hard for me to say. I don't know an outlook that
never happens.
The biggest thing I'm thinking, the furthest out I'm thinking right now is like through mid to end of January at this point.
Okay.
I don't think so. Obviously the Tesla move was incredible. I missed the initial up move, but did call out a great long on November 15th when it was trading at like $310, and also retesting the ADMA on the daily chart. So it's the same principle there. I don't think that they can continue the way that they did with that degree of momentum, like what happened immediately after the election. And if anything, if I still have my charts up, Tesla should have continued today. It should have continued today if that was going to be the theme. So, this Tesla chart, here's the move post-election. Massive, huge momentum move, $275 up to 300 and almost 60. We called out a great short here, by the way. Multi-day short, just back down to equilibrium on the daily chart. Then liquidating the short, called out for the long here on November 15th. For me, I just took it as a day trade. I was out. I made like $10, $15 in it, and I was out. Other people, I think, might have swung it and caught a little bit of a bigger, better move. But then we set up with this beautiful consolidation pattern here last week. 4 trading sessions of tight sideways action. This ADMA catches up. Then Friday, it breaks out and continues. Friday, Tesla long was one of the best trades of the day. But this should not be a one-day move. If what you're describing, Greta, is going to be what happens, where we're getting continuation of like that, late 2020, early 2021, like bubble-ish style trade where everything was ripping through the roof, then Friday should not have been a one-day move for Tesla. It should be the next leg higher of something similar to what happened post-election. Maybe not as extreme, but it should be giving a day 2 today to the 370s or 380, a day 3 on Tuesday or even into Wednesday, where this thing extends into like $400. That's what the stock should be doing. Instead, it traded to above 360 this morning, gave the opportunity for continuation, and failed all the way back down. Palantir's another one. I'm short Palantir, so talking my book here a little bit. I'm short, but I was telling the team this morning, like, if I wasn't already short this stock and have a game plan that I need to manage, I would not be shorting Palantir into the gap up this morning, because Friday was just a day 1 bounce off the ADMA. Today it's gapping up to new all-time highs. It's gapping up to above $66. This thing could very easily give a day 2, day 3 continuation of that like post-election momentum to get into the low 70s. What are we seeing so far? The day hasn't ended yet, but we're seeing this thing fail to do that. Potential close below $66 in Palantir and a close below 360 in Tesla, to me, means that like style of trade that we had post-election is gone. Now, it'll still pop up in certain areas. We talked about the quantum computing stocks earlier that are, going absolutely crazy. You'll always get your one-offs that are having that really big momentum. But I think that the big momentum moves market-wide are gone. I think for, a Tesla or a Palantir, those big market cap companies, that it's gone. And that's not to say we can't go higher. I actually am a bull on the market, but I think that the way we go higher is through like a grind, not through momentum continuation.
All right. Monday of a shortened holiday week. Give me some of the setups that you are loving for yourself, that you're looking at as a trader.
Sure. So a little bit trickier right now to do a lot of new trading as I pull up this chart of the SPYs. Last week I was a big caller on the dip buying back when we were still trading at like 585. But as we extend back into 600 and we have moderate extension in the SPYs and and almost extreme extension in the Qs, it becomes a lot more difficult to do a lot of new buying here. So I'm still in dip buying mentality. I'm interested in buying those pullbacks in the market really throughout this year as they come into play, unless the technicals really begin to prove me that I'm wrong. So I'm interested in doing that. And then at the same time, when things get silly, I'm not afraid to, even though I am a bull, I'm not afraid to come in on the other side. So, again, I did short some IWM today for, this is just going to be a trade. Or I did come in and short, again, those quantum computing names. I still have 2 of them on my books right now, even though I've got reduced sizing from earlier. Like I'm still short QUBT. I'm still short RGTI as just little trades right now. I had AI as a potential short on my list today. I had SoFi as a potential short on my list today. I had traded Walmart as a potential short on my list today, because this was another one that was like a day 4 gap up this morning. Not usually the type of stock I go to. So as long as the market keeps moving, you know, we're going to get great trading opportunity, one step at a time. Big picture, the dip buying opportunity was last week. It needs to reset up a little bit. Small picture, there's some stocks that are going crazy out there that are giving tradable opportunities in both directions.
Good stuff, Derrick. All right. It's Monday. I know you only have 3 days to really trade, so I'm going to let you get back to it. Everyone else, good luck in the market this week. If you want to get Derrick's ebook, you can go to t3live.com/DOLive. It's a free ebook about prop trading and the benefits of prop trading. Again, Derrick is a prop trader with T3 Trading Group, and if you work with them, you work with Derrick on a daily basis. He's a great trader. Derrick, have a great rest of your day, your week. Happy Thanksgiving, and I'll talk to you again next Monday.
Thanks, Greta. Happy Thanksgiving.
All right, bye.